Success in business depends on anticipating the future. That's just the way it is. And insurers know this only too well. The insurance industry is at the cusp of large-scale digital transformation. Insurers have started to deconstruct their business model, reimagine processes, and redefine their value proposition to meet the expectations of today's customer. Insurers have undergone a radical and irreversible shakeup of the status quo. Digital-led business transformation is reimagining the insurance value chain, creating new distribution opportunities, altering how insurers can assess, price, and manage risk, and generating new business models. For example, a traditionally distribution-focused insurance business model is now pivoting to a customer journey-based offerings. Similarly, an industry such as insurance that works on the laws of large numbers now relies on predictive analytics to offer the best products and add-ons for the customer. And the shift from pure risk-based products to more predictive, preventive, and holistic service delivery models is coming into play. It well and truly is a bold, better, and dynamic new world for the insurers. Hello and welcome to ETCIO LeaderSpeak. In this episode of ETCIO LeaderSpeak, we have with us Manu Lavanya, Chief Operating Officer for Max Life Insurance. Good afternoon, Manu. Welcome to the ETCIO LeaderSpeak session. Thank you for taking out time to be with us on this show.
Thank you so much for having me on the show. Really looking forward to our conversation.
Manu, we'd like you to help us unravel the ways in which digital is impacting one of the leading life insurance companies like Max Life Insurance. Now, we know that digital transformation is all about innovating at scale, building cloud nativity, and data-led decision-making capabilities. So how should insurers reinvent themselves from the core? And what's been your strategy at Max Life Insurance? Also, if you could tell us, how are you aligning the organization to take this vision forward?
A fantastic question, Sneha. And if I take a question into the three parts that you put forward. First, what is the implication of this digital transformation broadly on the industry, on the life insurance industry? So that even today, when we look at the penetration of life insurance in our country, it's still about 3.1%, right? So there's a significant market to be had. Over the years, the digital disposition of prospective customers has also increased significantly. And the fact that data consumption as a cost is one of the lowest price points in the world in India is actually very naturally lending itself very well for many of these cohorts to start looking at one, getting serviced digitally, getting accessed digitally. And in all that expansion of market, how quickly the reinsurers can react to make sure that their customer acquisition strategies, their onboarding strategies, or their risk assessment strategies also are able to cater to that pool of customers who's becoming more and more technology and digitally aware. That becomes extremely critical. So one, there's a microeconomic or a micro social phenomena that is really driving or the insurers to look at leveraging technology and digital deeper and deeper. The second dimension of change that is happening is the volume of data available for the life insured. All of us are leaving our data halos, footprints extensively as we go across our lives. And now the industry is really thinking about, hey, if I have to really expand, if I have to really go after cohorts that erstwhile were difficult cohorts to price or difficult cohorts to write risk, for example, rural, for example, housewife, for example, self-employed, right? People have over the years started relying heavily on data and analytics to one, learn more about those segments, two, use that analysis to craft newer products, like exactly what Max Life did by specifically launching products for our homemakers. How do we tap those cohorts of potential businesses that erstwhile were difficult to do or difficult to price because of paucity of data, but now with the data explosion happening all around us, digital has become a great route for broader market acquisition. Now that's on the incoming side. Let's come out the impact of digital that the insurers are seeing on the onboarding front. Fraud and mis-selling has been always a great challenge in this industry to deal with as we are trying to underwrite the right type of risk to get onboarded into our systems. And again, here, data and analytics have played a very significant role in making sure that newer methods of leveraging vision-based AI, leveraging audio-based AI, leveraging tools like photo matching, video point of sales verification. These have actually led to ensuring that we are able to manage and measure the incoming risk very adequately. And above all this, put the layer of what COVID has taught us, right? An industry that was heavily dependent on a personal interaction between a buyer and a seller. Suddenly, COVID rewired the entire industry and put a new model in place that technology can indeed help you acquire and onboard customers at a distance. So there have been multiple changes that this industry has seen, Sneha, over the last 2-3 years. And everywhere, the only tool that has come to rescue when there's a trade-off between incoming volume and risk or business discovery and risk has been digital and technology. And hence it's become really imperative for all the insurers to, in some way, form or shape, put digital, data, cloud, AI, ML at the center of their execution strategies. I hope that answers the first part of your question. What have we been doing about it, Sneha, as Max Life Insurance? See, at Max Life Insurance, we very strongly believe that the long-term sustainable differentiation for us will be deeply driven by how and not just what.
Correct.
And digital and technology plays an extremely critical role in differentiating on how. So when we put our digital strategy, Sneha, we said that we should address the strategy in 3 tiers. The first I call is verticals. And when I say verticals, it means either business acquisition through my pure digital channels. Very happy to share with you even today, see, we are a leader in online protection sales. 1 in 3 policies written online in protection is a Max Life policy in India. So there's a significant commitment, there's a significant focus around expanding that footprint. And that needs recrafting journeys which are more relevant to the digital natives, recrafting the value proposition, the chase, the product recommendations, all happening on online platform only. And how do we make sure those journeys become world-class? The second dimension is around purely enabling the overall sales ecosystem. And digital is playing a significantly important role in converting the art of selling in, let's say, in a physical agency model or in a physical banker model into an art cum science. Because what COVID has also taught us that there is a lot of rewiring that had to happen in people's mind in terms of what is the right process to execute some of these last mile sales execution activities. And that's where we have found that digital and technology platforms, for example, the CRMs of the world, have really been able to give the method to the madness so that there can be a repeatable success, there can be a repeatable progress around some of those last mile sales execution activities. The another vertical after sales, if I really focus on onboarding and issuance, extensive investments being made in Max Life around, first of all, we believe in a vision, Sneha, that the best underwriting model is no underwriting model, because we don't underwrite through very complex algorithms. We are not talking about oncology research or something where the branching is so complex that it will take a significant effort technically to create a decisioning engine. But hence, we very strongly believe that our strategy for underwriting has to be more moved towards an exception-based underwriting as we move forward, which means that the role of stay-through processing will become more and more relevant and more expansive in our onboarding strategy as we go forward. Happy to share with you that over the last 2 years, we have seen a significant change and an improvement in the amount of policies we are able to write without a human underwriter touching that policy. We used to have this number about 47, 48% 2 years ago. Today, in retail, almost 75 to 76% of our policies do not require any human intervention, and they are issued within 30 minutes of the application. It's only on the rest, about 25% of the cohort, where there are certain specific interventions required. So our goal is to take this number north further and further, especially in the retail space. Protection still requires medical underwriting most of the times. It still requires an intervention to be looked at far more deeply. But on retail, at least, we believe that there's a lot of possibilities still to automate the entire onboarding and issuance process. Now, as a part of the onboarding process, there are dimensions here that we believe we are investing heavily is around fraud prevention. Be it the idea of impersonation, be it the idea of preventing mis-selling through interventions like video-based point of sale verifications, where we can ask people about consent, recorded consent through a video, that they indeed want to buy what they want to buy, right? A lot of analytics has been driven in Max Life around the whole idea of fraud prevention on medical centers. Happy to share with you that the digital adoption in the last 2 years has increased from about 52% to almost 83% in the last 2 to 3 years in terms of people, share of transactions that people are able to self-serve or able to drive through a digital medium rather than a physical medium. 100% of our onboarding happens through digital media. There is a significant amount of focus around driving service, customer service, and keeping the promise, which is ultimately the settlement of the claims, the maturity payouts using digital means. Last but not the least is a pillar on enterprise. Now, you can't become a great digital provider to the customers if we are not digital as an enterprise, right? So significant investments around cloud, around automation, around enterprise HR. In fact, last year has seen us implementing some major initiatives, be it our ripping apart our entire investment management systems, our HRIS systems, and bringing in world-class platforms to really drive a digital enterprise internally. Now, these were the verticals that I talked about, Sneha. And if I talk about the horizontals, data, intelligence, AI, machine learning form a horizontal that cut across all these verticals. And over the last, just to give you some numbers, over the last 2 years, 2 years ago, about 16% of our assets, 15 to 16% of our applications and assets were cloud native, service through cloud. Today, that number is almost 47%. By end of next financial year, we'll be at 72%. So that is the speed, and that is the volume that is coming through as far as cloud adoption is concerned. And the last horizontal that I would like to speak about, despite data and cloud, is people. Often what happens, Sneha, is that's this one topic that typically gets, I would say, the last segment treatment, because it's assumed that talent is available. But there is this phenomena that we are seeing at Max Life, that when we are looking at doing cutting edge work in digital, in AI, ML, we are still consuming from the same talent pool in the market from where Amazons of the world and the Flipkarts of the world are drawing their talent from. So we have actually embarked upon a journey that not only we want to become a digital first insurer company, but also an employer of choice as far as digital talent is concerned. And hence, so broadly, 5 themes around verticals that I shared about, which is e-commerce, sales enablement, onboarding, customer service, and enterprise, supported by our horizontal strategies around pervasive intelligence using data and analytics, cloud, and building an employer of choice as far as digital talent is concerned. I hope this gives you a complete picture of the Max Life digital strategy.
Right. Thanks, Manu. I think that was a detailed and very comprehensive view of how you see the market changing, the industry responding to those changes, and how you're trying to align your vision around these changes and disruption that's happening in the industry. Now, you raised some very relevant points in the course of this conversation, and I'd like to drill deeper into each of those. You mentioned that you're investing very heavily in underwriting and in making it more sophisticated. So you focused on automating and accelerating underwriting, strengthening the mortality models through ML, and developing a medical network process efficiency to detect the risk and fraud. How do you see it playing out in the coming years?
Great question, Sneha. And see, underwriting is one area, Sneha, which is undergoing a massive transformation globally as well. When I look at life underwriting as a process, first of all, people have started asking the question, I should minimize a need for a medical intervention to begin with, right? Phlebotomy, for example, is a medical intervention that not only causes friction in the process, but also it needs a separate part of the cycle of physically a phlebotomist going to a customer or a customer coming to a medical center. It adds time and effort to the process. There's a significant amount of work being done through AI and ML in underwriting around, hey, how can I minimize the need for medicals? That's one example. The second example is around the whole medical diagnostics supply chain. Medical diagnostics is a very expansive sort of a business model in India, and most of the insurers actually depend on secondary, tertiary relationships to provide the reach that is required pan-India to drive medical testing. However, that is also a model that is prone with risks of fraud, be it impersonation, be it making sure that the customer was indeed present at the medical center when the values were taken. And today, technologies like geotagging make it extremely easy for us to do that. So Max Life is significantly invested, one, in making sure that we are able to track any impersonation attempt through video-based and image-based and analytics while the medical process is happening. That's one. Second, machine learning can also tell us based on the natural variability of results that come in the Indian cohort. For example, I'm getting an HbA1c value of 6 consecutively for 50 reports from a center. There are analytical tools that we have built that actually give us a warning that, hey, there is a chance of fraud, testing fraud happening in these centers. And this is very evident from the natural shift that we see in the data of testing, the output of testing. So today, analytics can give me even those highlights. So what we have done is we've actually implemented an amazing project called MediCheck. And what this does is it has run all our diagnostic centers through an AI ML model. And it throws out, hey, here are the 5 centers where absolutely fraud has happened. Here are X amount of centers that are gold standard. And for the last 15 years data or 10 years data, we have not seen any significant statistical reason to believe that there is fraud happening. So we are able to tier those, first of all, tier those medical centers and actually delist all of them. Just to give you some numbers, within the first month of this model going live, we actually saved 8 crores of potential fraud in the very first month itself, led to a delisting of more than 200 medical centers. And these would be done manually otherwise. But today, AI and ML is coming to rescue to really make sure that in underwriting, in medical testing, we are able to find this variance and this fraud potential way earlier from data itself.
Right.
On the other dimensions of underwriting, which is around how do I figure out newer cohorts of mortality? How should I look at pricing for a homemaker segment, or how should I look at pricing for a self-employed segment? In our industry, self-employed below 2 lakh income is a sensitive segment that every single insurer is extremely, cautious about in terms of the underwriting practices and making sure that the risk is minimal, right? How do we discover semi great cohorts among these broad cohorts. So as you very rightly said in the beginning, an industry that very, very extensively depended on broad cohort-based pricing now is using data and analytics and underwriting to make sure we can sharpen those cohort definitions very, very specifically for us to be able to drive product innovation, pricing innovation, and making sure we are able to expand the reach of our insurable segment. So that I see that significantly happening through underwriting. And finally, a lot of intervention is happening in underwriting, Sneha, around the whole efficiency of the process itself. How much of it can I digitize through OCR? How much of a decision can the system give the underwriter for an underwriter to look at? Or, for example, we have implemented an amazing governance tool using machine learning, which puts a warning up there the moment they see a policy getting issued, where even there may be a potential risk of breaching, let's say, a stated guideline. The borderline cases, the cases where typically you sometimes depend on human judgment, right? How do we then really do it more systemically so that we're able to measure that associated risk? How am I able to measure the risk of not only a claim coming in, but risk of let's say a non-payment of premium? How do I measure the risk of persistency at the point when the policy is getting applied? So a lot of intervention around the data and analytics being done in the area of underwriting, medical sciences. Then I see that industry will evolve in that direction far more aggressively as the ecosystem of data becomes more stronger. A lot of this success depends really, Sneha, on how well the ecosystem data is available. And with networks like IIB, the industry information databases, where as they become more and more enriched, as they become more stronger, the government is also, the financial sector is also going through a huge adoption of account aggregation data. Now, the account aggregation itself will prevent a lot of underwriting because a lot of information will be available. And at least Max Life is desperately waiting for the health data to get integrated at some point of time with that financial data, which will really be the vision and the future of truly effortless data processing as far as most of life underwriting is concerned.
Now, Manu, the insurance is a production-led, distribution-focused business, but today it is more of a customer-oriented business. So when we talk about experience modernization being a priority for insurers focused on customer centricity and the ever-evolving, ever-changing needs of today's fickle-minded customer, how are you trying to drive it within your organization? And what role do you see data science and the customer intelligence play in creating a foundation for this sort of a culture?
Great question, Sneha. And I'll separate the response in two parts. The first part being around how do we address the customer experience from a journey perspective. And the second is how do we enrich that experience from an application of analytics and making that experience very, very particular, very, very customized to the cohort that we're trying to address. I'll take the question in two parts. First one, from a journey perspective, you very rightly said, Sneha, that because of the digital disposition improving in our customer cohorts, most of our journeys, if you see today, are undergoing a massive change. One, WhatsApp as a tool for business is only increasing exponentially. The advent of the incremental progress in mobile technology, QR, code-based servicing, all those have become now integral parts of our customer journeys. The amount of investments going into making sure that self-serve is driven significantly in our organization. And it is these hybrid phygital journeys that at least we believe will stay for some time. That is the truth. Coming to the second part on what role is data and analytics playing in customizing these journeys, that when we look at the role of data, it starts right from the stage of recommendation. Then there's a lot of customization that happens also using AI/ML at the experience at the servicing level. Where, for example, we're also doing analytics around when is the best time to call somebody for a renewal. Different profiles of people are busy at different times of the day. What is the best time to call? What is the best propensity? And not only that, whom do we need to call? What is the propensity to not pay unless called? And hence, can we optimize that model and make sure we only disturb those customers where we believe that they may need a reminder help, for example, right? So the application of data analytics is at every stage of the customer experience journey, because most of these experiences get routed based on the triggers that are emanated by some of these analytics. And that's why we believe that these journeys have become relevant and richer day by day by much better application of AI and ML.
Manu, from what you're seeing in the industry, both globally and the domestic market, what are the forces that you think will stretch the contours of the industry over the next 2 to 3 years?
Uh, Great question at an amazing time, Sneha. It's so fascinating to see the regulators' commitment towards a vision of everybody having insurance by 2047, right? And what that vision has done, that vision has really unlocked in many ways the ways of doing things. And the regulator is actually challenging every participant in the industry. The second dimension that the regulator has made it simpler is, for example, file on use versus use and file, right? How can we make product innovation reach earlier? This is going to really create a lot of innovation in the industry around how do we get very innovative products earlier, quicker to the market, and really fosters a much deeper and a much richer portfolio of ideas in our sandbox, so that we can really try product innovation extremely well. The third dimension around the regulator really demanding the insurers to truly be digital in all their offerings, in all their processes, in all their interactions with the customers. So this push is now coming from the regulators themselves, right? And this progressive view is really leading to a big marketplace innovation as well. For example, the whole Bima Sugam that the regulator is trying to launch, where they truly want to create a countrywide open marketplace for all insurance products, dematerializing all the insurance policies, right? So some of these are industry-changing events that will actually drive the next steps of industry in India significantly going forward. At a global scale, India and global, leverage of AI/ML, leverage of data, as more and more data becomes available. See, the challenge in some of the Asian economies is that still in the developing economies, data is still fairly fragmented. And as we are looking at government-driven initiatives around integration of these data marketplaces, as health data becomes more and more consolidated, as health data becomes more and more structured, and government incentive initiatives around integrating, let's say, financial data, health data, property data, which is exactly the vision that we have seen in the Ministry of Finance as well. We actually see a roadmap where we will have far richer portfolio of data consumed as APIs and services by the various insurers that can make our underwriting, that can make our decisioning, and as a result, making our penetration of our products and services into the broader community much higher, right? So I definitely see that both at a global scale as well as in India.
Such a pleasure talking to you. Thank you so much, Manu. In the time that we had you, painted a beautiful picture in terms of the changes that are happening in the industry, the market forces that are bringing in those changes, how you are prepping your organization for it, what are some of the future forward steps that you've taken, and how those bets are paying off now, and the roadmap forward, also the encouraging environment that you see with the regulator. Thank you so much for sharing your views and insights with us. Truly appreciate your time.
Thank you, Sneha. It was a pleasure. Fantastic questions. Very thought-provoking indeed. And look forward to interacting with you further.
Thank you so much. It'll be my pleasure. Thanks
Thank
once
you.
again, Manu. Thank you.
Bye-bye.